On this video of the Bedroom Investor Stock Valuation series, we will discuss the 4 use cases of the price-to-earnings ratio. So the price-to-earnings ratio can be used for 4 things. The price-to-earnings ratio can be used to 1. Compare a company you are researching to the broader market, such as the S&P 500. 2. Compare a company you are researching to a benchmark. 3. Compare a company you are researching to its peer or peers. And lastly, 4. Compare a company that you are researching to its own historical performance. So, the first use case of the price-to-earnings ratio is when you compare a company that you are researching to the broader market. That is when you take the P/E ratio of a company and compare it to the broader market, such as the S&P 500, and then find out whether the stock that you are researching is trading at a premium to the market or is trading at a bargain compared to the market. When you are in the process of comparing the P/E ratio of a company that you are researching to the broader market, such as the S&P 500, and you want to find the P/E ratio of the S&P 500, that is very easy and straightforward to do. You can go to the website yahoofinance.com, which is a popular website for finance and the stock market. Then, search for the S&P 500 ETF, or alternatively, search for the ticker symbol SPY in the search tab, which is where all the numerical information and stats concerning the S&P 500 will show up. Note that the S&P 500 is an exchange-traded fund that tracks the price of the S&P 500 index. You can then find the price-to-earnings ratio of the S&P 500, and in this case, as of the making of this video, the P/E ratio is 28.21. A quick way to find the price-to-earnings ratio of a company is similar to how we found the P/E ratio of the S&P 500. Let's look at the company Coca-Cola. A quick way we can find the P/E ratio of Coca-Cola is by going to the website google.com/finance and typing in Coca-Cola in the search tab. Once you click on Coca-Cola, key information regarding the stock will then come up. From here you can find the price-to-earnings ratio of Coca-Cola, and on this occasion, at the time of making of this video, the price-to-earnings ratio of Coca-Cola is 25.32. We now know the price-to-earnings ratio of Coca-Cola, which is 25.32, and we also now know the price-to-earnings ratio of the S&P 500 index, which is 28.21. This shows us that Coca-Cola is trading at a discount relative to the broader market. We have covered the first use case of the price-to-earnings ratio, where we compare the price-to-earnings ratio of a company to the broader market. Next, let's look at the second use case of the price-to-earnings ratio, where we compare the price-to-earnings ratio of a company to a benchmark. So now we will look at how we can compare a company that we are researching to a benchmark. Let's use Chevron as an example and imagine that this is a company that we are researching and that we want to compare its price-to-earnings ratio to a benchmark. First, we go to a website such as yahoofinance.com and type in the search tab, the ticker symbol XLE. The XLE is a fund, also alternatively known as the Energy Select Sector SPDR fund, and it is an exchange-traded fund that tracks the Energy Select Sector Index. Once you search for XLE, the information and stats regarding the fund will then show up. These are the top 10 holdings of the XLE fund, and we can see that Chevron is the second top holding as of the recording of this video. And the price-to-earnings ratio of this fund, again at the time of recording of this video, is 8.28. Similarly to how we found the price-to-earnings ratio of the Energy Select Sector Fund, by typing in the ticker symbol XLE in the Yahoo Finance search tab, we can do the same to find the price-to-earnings ratio of the company Chevron. We can either search Chevron or its ticker symbol CVX in the Yahoo Finance search tab also, or in this case the Google Finance site. This will bring up the information and stats pertaining to Chevron. From here we can see the price-to-earnings ratio of Chevron, which at the time of the recording of this video is 14.38. We already know the price-to-earnings ratio of the Energy Select Sector Fund is 8.28. So now comparing the price to earnings ratio of Chevron to the Energy Select Sector Fund benchmark, we can see that Chevron is trading at a premium. We have now looked at the second use case of the price to earnings ratio, where we compare a company that we are researching to a benchmark. Now let's look at the third use case of the price to earnings ratio, where we compare a company that we are researching to a peer. For our example of use case 3 of the price to earnings ratio, where we are comparing a company that we are researching to its peer, we will consider two hypothetical coffee shops, Anne's Coffee Shop and Emily's Coffee Shop. Then, using the price to earnings ratio, we will deduce which of the coffee shops is the expensive one and which one is the cheaper one. Okay, so let's take a look at the two coffee shops, Anne's Coffee Shop and Emily's Coffee Shop, and see how we can use the price to earnings ratio to figure out which company is the cheaper one. First, we consider the price to earnings equation, where the share price of the company is divided by the earnings per share. For Anne's Coffee Shop, the share price is $10, whereas for Emily's Coffee Shop, the share price is $55. Now for Anne's Coffee Shop, the shop managed to generate an earnings per share of $2. As a result, the price to earnings ratio of Anne's Coffee Shop computes to be 5 times. Comparatively, Emily's Coffee Shop generated a staggering earnings per share of $15. Hence, the price to earnings ratio of Emily's Coffee Shop is calculated to be 3.67 times. This shows us that Emily's Coffee Shop is the cheaper of the two stocks. That wraps up the third use case of the price to earnings ratio, where we use the price to earnings ratio to compare a company we are researching to its peers. Last, let's look at the fourth and final use case of the price to earnings ratio, where we use the price to earnings ratio to compare a company we are researching to its own historical performance. So the fourth use case of the price to earnings ratio is when you use the ratio to assess a company that you are researching and compare its historical performance to its current performance. Again, let's look at Anne's Coffee Shop. As of August 2024, Anne's Coffee Shop currently has a price to earnings ratio of 15. Remember, this is the most recent and current price to earnings ratio of Anne's Coffee Shop. To calculate the 5-year price to earnings historical performance of Anne's Coffee Shop, we must first find the price to earnings ratio of the last 5 fiscal years. Over the past 5 preceding years, the price to earnings ratio of Anne's Coffee Shop has been 12, 17, 11, 20, and lastly, 13. Now the formula for the 5-year average price to earnings ratio is as follows. The price to earnings ratio sum over the last 5 years divided by 5. 5, because that is the number of years we are comparing the current performance of Anne's Coffee Shop to. Going forward, the sum of the price to earnings ratio of the last 5 years is 73. So we now divide 73 by 5, and this computes to be 14.6. So the average price to earnings ratio over the last 5 years for Anne's Coffee Shop is 14.6 times. We can now see that the current price to earnings ratio of Anne's Coffee Shop, which is 15, is higher than the average 5-year historical price to earnings ratio, which is 14.6. This shows us that currently Anne's Coffee Shop is overvalued compared to its 5-year price to earnings historical performance. We have covered the fourth and final use case of the price to earnings ratio, where we use the price to earnings ratio to compare a company that we are researching to its own historical performance. I hope you found this video valuable. Thanks for watching. And don't forget to subscribe to our channel to be notified of our new videos in the future.